Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Thursday, the 30th of June, Bull versus Bear webinar. Steve Miley on the call for trade day. Last trading day of the quarter, 30th of June. Last trading day of the first half of 2022, which has seen all sorts of market shenanigans, things we haven't seen for a long time in financial markets. Aggressive bear market in the bond market, aggressive bear market in the equity markets, as we've seen inflation take hold, going to multi-decade highs. Fears of stagflation, that's inflation plus stagnation or recession. And that has seen central banks very active across the board. So coming into the end of the first half of the year, the end of the second quarter, markets are still under pressure in here from the fears of high inflation causing the central banks to be more hawkish in their stance to tackle that with higher interest rates, and those higher interest rates and higher inflation and uncertainty that comes from high inflation potentially leading to recession, possibly late this year going into 2023. So all of that is weighing on markets again in here today. So we've seen, after we saw a bear market recovery last week, that's all it is at the moment, a bear market recovery. And the markets this week have been more negative. It was a fairly quiet day yesterday. Equity markets kind of sideways. Most FX markets, even the bond markets, not doing too much. If anything, bond markets actually went to higher prices, lower yields, which should have been supportive of equities. Equities didn't really go down. Stocks were fairly sideways through the session yesterday in the US and for Europe. However, this morning, European stocks have gone lower. US futures have gone lower overnight with Asian stocks as well. And that's leading us into a more negative tone as we go into the US Open today. Let's take a look at what we've got coming up. You see, we have had some numbers out of the UK in here. Actually, most of the GDP numbers out of the UK came in line with expectations. German retail sales actually beat expectations in here. French consumer spending beat expectations. The inflation data out of France was in line with expectations. German unemployment rate worse than expected, though, so that's not good in here. And then we had the unemployment rate actually worse than expected in here. So already the recessionary pressures coming through. Moving into today, what are we focusing on? Well, we do have the OPEC meeting today, OPEC Plus and those as well, OPEC Plus. So that's going to be significant, particularly given what oil's been doing. Obviously, oil has been pushing notably low. We did get a spike back higher in oil, but oil down in here and down. I think it's going to post its worst month. Where is it? Oil in here. First monthly decline this year. I think worst month since August or November last year. Yeah, biggest decline. First monthly decline since November. So in some ways that's like seen as a positive for markets. You've got to say really in that. Oil lower is going to mean less, inflation, fewer inflationary pressures, less of an inflationary theme coming through from that part of the energy sector. However, other parts are not looking so good. Gas, particularly in Europe, natural gas prices are still pushing back higher, particularly forward rates of natural gas because of concerns around Russia. And the fact that Europe are trying to put in a hard stance against Russia on the natural gas side, and that's going to obviously potentially push gas prices higher in here. So we've certainly seen a mixed bag there on the energy side. So it's going to be interesting to see what we get from OPEC today, if we get anything unexpected, if they are going to turn the taps on, try to increase output even more. I mean, they are maybe struggling to do that, to increase output. And so whether they do try to actually increase output and announce that, if they do that, that could put even more negative pressure on the oil price that we've seen, really throughout this month, even though we'd seen a solid rebound in the oil price over the past 24 hours. So, that's going to be important to watch out for. Usually get an announcement on that through the European afternoon, so the US morning. Critical, though, really today, I think we're going to be watching out for this PCE data. As I stress in here, although the CPI is the more watched piece of data, although the CPI data tends to move the market more, the Fed tell us that the PCE data is their preferred measure of inflation, so we should certainly be watching it. We get that out in 55 minutes time, okay? So that's coming up at 8:30 08:30 Eastern time, and 07:30 Central time. Going to be watching out for that. Certainly today is going to be an important factor. Could really significantly see movements in markets on the back of that. So all eyes on the core PCE data, but watching out for that OPEC meeting today. And then we get some lighter data and bits and bobs as we go through today. Chicago PMI later today. Lagarde is speaking again, but Lagarde spoke yesterday. Are we going to get anything new? Probably not. Canadian GDP probably not going to impact us too much unless you're trading in the Canadian dollar. So those are the focal points going into the day. Let's have a look at the major news-wise, what's been going on. So S&P limps to slightly lower close. This is a recap from yesterday. Oops, I don't want to look at that. Adverts popping up. So the S&P in here, a lower close yesterday, but only slightly lower close yesterday. More significantly is the overnight in here. So that's and we did have the GDP data yesterday. Remember, GDP data is very, very backward looking, so didn't really impact on markets yesterday. Markets were kind of slightly lower, like the S&P was pretty much flat, slightly up on the Dow, and the Nasdaq effectively unchanged. So Nasdaq and S&P really didn't do too much yesterday. If we look what we've seen in here this morning, stock futures drop amid mounting recession woes. So nothing really new in here. Out of we do see European junk risk gauge passes 600 for the first time since 2020. Obviously, that's a concern. This is a rating of junk bonds in Europe, so that's a bit of a concern. Obviously, showing a weakness and vulnerability coming from in European junk bonds in here, a cost of insurance against those in here, default insurance spiking up to 600 basis points for the first time in 2 years. So, and that's showing the concerns around defaults. Okay, but really what we're seeing in here is no real new news in here today. But what we are seeing in here is ongoing concerns, and I think running into that data as well. So probably longs from last week, some of the good news from last week, some of the recovery efforts we've seen from last week in here, and we spoke about this yesterday. What we've seen in here from ETF side on the rebounds that we've seen previous this year, we've seen buying on the rebounds. On the latest rebound that we saw last week, we saw selling from the ETF market. So people selling into that. So net outflows rather than when we saw the previous rebounds, we saw net inflows, net outflows. So as the market has rebounded, we've seen net outflows from ETF funds. What else we got going on? So stock futures in here looking lower in here this morning. Again in here, look, futures tumble on last day of a torrid first end of quarter, end of H1, first half of the year, that is end of Q2, second quarter, end of quarters, end of months can sometimes be funny in here. Okay, so watching out, you can sometimes get very random moves because of indexing, rebalancing, funds. Whether it be bigger funds, pension funds, life assurance funds, that kind of stuff, or investment funds, or whether it might be faster money, hedge funds, they tend to do some rebalancing, change their, their portfolios potentially at end of month, and that can see financial markets move. You get odd movements sometimes, whether it's coming from FX, whether it's coming from equity markets, whether it's coming from the bond markets, you sometimes get odd moves as we get flow of funds. And that can cause unusual movements, particularly there's little pockets of illiquidity. You get a big fund come in and has to either buy stocks or sell bonds or do whatever they need to do. It can move markets, more aggressively than we normally see. Sometimes you see markets on these last days of months, quarters, half years, sometimes moving erratically, and there's no real reason. You don't really see why. It's just a price flow. It's just flow of volume really going through markets, and that can cause unusual spikes. So you need to be aware of that, thinking about that today. If you see unusual spikes, don't try and oppose it. Don't think, this is going to end very quickly. It probably will end at some point, but it could go on for minutes, hours even, as these funds come, as they go through. So don't necessarily try to oppose any kind of spiky moves that you might see coming through today, any kind of volatile moves. Let's go through 5 things to start your day in here. So recession rumblings, nothing really new there. Okay, the only one thing. So look, high-end furniture retailer R8 slumping in extended trade of slashing forecast. Actually, China's economy showed further signs of improvement in June in here. Just opened that one up in here. So this is the manufacturing PMI data we had through this morning. Remains weaker than forecast, but surges to highest in more than a year from the non-manufacturing. That's the service sector from China. So China seemingly doing okay in here. Let's go back to five things. Down commodities. Commodities are set for a very negative month in here and a very negative quarter. So for commodities, base metals, worst quarterly slumps in 2008. Again, this can be viewed as a positive, but this is obviously because of recession fears, right? Recessionary fears in here, seeing commodity, future demand going to be lower because of recession. So commodity prices going lower. Base metals, worst quarterly slump since 2008, since the global financial crisis, right? Remember, price of base metals, reflecting sometimes China's economy, okay? So look, China's economy, so a global financial, as China's economy recovered only gradually and fears of a world recession intensified. So oil has had its first monthly decline since November. We've already spoken about that, but we do get OPEC plus today. Bitcoin on track for its worst quarter in more than a decade. Don't need to talk about too much about Bitcoin, but we're getting more negativity coming out of the cryptocurrency market. The 3AC hedge fund in here under liquidation pressures and further scandals coming out around that. I saw today around, where is it? I think I might have even opened up. Is it? Where are we? That's about the futures oil. Here it is, 3AC. So yeah, here we go. 3 arrows now. The Monetary Authority of Singapore in here. They're being reprimanded by them for providing false information as well. This is on top of the fact that they're going through the British Virgin Islands Court ordered them into liquidation, and also previously an outstanding bad loan that they have. Okay, so all of that, looks like torrid times for this hedge fund, one of the world's biggest crypto hedge funds in here, under real pressure in here on top of everything else. So not really affecting us directly, but nevertheless, it takes us deeper into like a risk off scenario if cryptocurrency area is in the negative pressures. Let's revert back to five things. What else do we have in here? So stock slump, we've already spoken about that. We know that European stocks lower this morning. In here, those credit numbers not helping there. And then, we've got the data we've got coming up. So the PCE data is going to be important in here. Chicago PMI, and then we also spoke about OPEC plus later today. What else do we have? So we spoke about China. We spoke about stocks in here and futures dropping. Again, same article in here from Reuters about futures tumble on last day of the year. Oil set for first month's decline this year since November. OPEC plus meeting, though, as we've expected, this rubber stamp further increases in production. We need them to deliver that to keep oil lower. We've spoken about that. So this is, I haven't really gone through this in detail, but Russia forced to withdraw from an important Snake Island, a strategic island in here. So that's kind of like a positive, I think, in here. No Russian troops on Snake Island. Our armed forces did a great job. So yeah, it's going to be interesting. And they took Snake Island on the first day of its invasion. Okay, and so yeah, it's going to be interesting in here. It says in here, Russia defense when it confirmed Russian troops have withdrawn Snake Island. It called it a goodwill gesture. I don't know what that means in here, but I know it is strategically important. But then what else do we have in here? But not really grabbing the headlines, that one. US recession more likely than not. Same for Europe. That's coming from PIMCO. PIMCO, one of the world's biggest, or if not the world's biggest bond fund manager in here, saying recession kind of is probably more likely than not coming out of PIMCO's global chief investment officer. What else do we have? And then just looking at where we are today. So European markets between 1.5% and 2.5% lower in here. The DAX, the German index, one of the benchmarks of Europe, in here down over 2.5%. The FTSE in here nearly down 2%. The French index over 2.5%. So Europe leading the markets lower in here this morning. Not as negative, but still negative in here. S&P, NASDAQ, and Dow all between 1.5%, and the NASDAQ a little more than 1.5% down going into today. Right, let's take a look at some charts. So there's the big sell-off in here. This is the S&P 500, significantly down, having kind of marked time, gone sideways yesterday. We had the big sell-off on, was it Tuesday, marked time on Wednesday. Overnight already looking very vulnerable in here, sitting right on the lows. We go to the 15-minute chart. We said yesterday, right? So there's the Here's the 15-minute chart. Here's the setup from yesterday. When we came in yesterday, where were we? Let's have a quick look. So in here, we were around here somewhere, right? And we said, there's no reason to buy it. The market didn't really get above. It just pipped above the little resistance points in here. And then after the open, and then eventually lower, but it's only slightly lower. And then the sell-off in here overnight. And then look in here, kind of dead cat bounce overnight. Hardly any bounce, bounced, and then went to a new low, bounced, lower, bounced. And, really marginal bounces and pointing lower right now. So for me, this just stays negative. Even though we're down 1.5%, this thing, as we know, can easily go down, easy 2.5% on the S&P, 3% on the NASDAQ, so this has got scope to go another 1% lower in here. So for me, this can only be seen as bearish. Minimally, it needs to get above these little overnight peaks in here. So they are at 37.86 and a half, 86 and 3/4. Above 37.86 and 3/4, sorry, 37.68. Get this right, 37.86 and 3/4. Only up through there kind of eases, very slightly starts to ease the negativity. If we take, you've got trend lines coming down through here. Okay, it's going to need to do even more than that. If we take a look at where the trend lines are off the high from this week, coming down through here. Yeah, that's not the best. It needs to be redrawn out through here. It needs to get back above here. So not only above that levels I just said, probably realistically more like back above here, up through through 37.85, 86, 87. Really the market needs to get above there to start to ease bearish. It would reverse that trend line. It's not the best trend line, because it's drawn off here and these more recent points. So not a great trend line. But yeah, back above there would ease negativity. But for me, it's looking very negative. And same story for the NASDAQ in here. But, no, it doesn't quite look as negative on the NASDAQ in here. And we're sitting right above that little impulse low there from back on the 23rd of June. Let's zoom in and have a look at that one. But again, dead cat bounce, overnight sell-off, not quite as aggressive, it feels, in here on the NASDAQ. So big sell-off in here back early this week. Choppy sideways yesterday, didn't really get anywhere. Down lower, better little bounce in here. Really, though, NASDAQ needs to be back above here. So 11,568. Whilst below there, it looks negative for me, And then again, you can draw the same trend line in off the... Actually, we could just probably pivot this one around if I can grab that point. Will it allow me to do that? No. Don't think it's going to. Oh, yeah. So there you go. So you can draw the same trend line. And again, it's going to come in, above that high will also be above the trend line. It's not a great trend line, though. I don't like the trend line. It's drawn off this point. Really, the trend line should come down at least through this point, and then we've obviously got above it. You can redraw it out here, but it's not a great trend line. But yeah, back above there. But yeah, for now, it looks negative. Let's take a look at that level. It's kind of holding. Yes, this level here. So this low here from the 23rd June is 11,482. And this morning we've been down to 11. Actually, no, that can't be right. Because we're definitely here. That's a wrong. I read the high, I think. Yeah, 11,460 and a half. And we've been down to 11,461 and a quarter. So through 11,460 in here, it starts to look even more negative for the NASDAQ. It's held, so you can look to sell a break on that 11,460 level, and then easily another 1.5% down for the NASDAQ. It's only down 1.5 today. It can easily go 3% the way it's moving these days. So there's plenty of scope for this to tumble further. Let's take a look at the commodity markets. Gold, first of all, daily. You've been clinging to, the fact it's been towards the bottom end of this range. It went down and poked to the bottom end of this range yesterday and sort of held. Now we're down through this lower point and it's just holding this low. It does look vulnerable. I know when we get to in a range, you're thinking, do I buy it here? Gold does look vulnerable to a deeper setback. I can easily see it testing this low. 1792 that comes from in here back in mid-May. And if we go take a look on, say, 30-minute chart, you can see that impulsive move just broke down below the kind of low from yesterday. Impulsive move through there, impulsive move through this low over here. and now targeting down. Yeah, it's going to be, not going to see it on this chart, but down towards that target. So yeah, I can see gold falling further. Not the best place to initiate the trade, given that it's just plunged lower in here in the last 15, 20 minutes or so in here. What else do we have? Let's take a look at oil daily chart first of all. Just going to check I'm on the right contract in here now. So I'm just going to do that offline. You're not going to see this on the chart. So futures. Yes, we're still on the. This is the right code. It's QULQ. So that's the August contract, right? June, July, August. A failure, a real negative failure candlestick yesterday. Having had this strong rebound in here over the last week or so, a really negative candlestick. We spiked higher, real big failure, a bearish outside pattern. What does that mean? Well, it means we made a higher high and a lower low than the previous day. That's a very negative signal, particularly when the market's been in an uptrend. It's a negative. It's kind of also called a key reversal day. So a key reversal day, obviously lower in here already this morning, reinforces that key reversal day. So very negative in here from the daily chart. And if we go take a look at intraday, I'm going to go 15-minute in here. So here's the recovery activity. You can see we're down through this trend line. Even if you redraw this trend line, we're drawing it off of there and there. Even if we redraw it now, I'm just holding this shallower trend line. So that's, look, and we're hanging right on there. Right? I'm going to get rid of some of this other analysis, but this is a really important trend line. Look. So I drew it originally off of here and here, and it went through this low. Now we redraw it off of here and here, and you can see now we've had another two touches. A touch overnight when it spiked down lower, went down to here. Actually, that was just this morning my time, overnight your time, if you're in the US. And so we spiked down to that and held, and now we're back right on that trend line. If we take out the overnight low in here, which is on the August contract here, we are 108.64. Down through 108.64 is going to make this look really quite negative, and I would expect this to fall. You could fall quite significantly. And you look at where we did yesterday. So yesterday we came down from 114.5 really to 109. Okay, effectively like 109. So this can easily move $5. And so far today we've moved about $1, right? So this could easily drop to like 103. It could easily go to that swing low there. That low there is 105.60. We could easily be down to there. And yeah, a break of that low. It's not just a break of the overnight low, it's a break of that trend line. We're playing with that trend line now. Through the overnight low takes us down to here. Yeah, down to there at least, really. So that is 106.04, 105, down in here, 100 to 105.60 level. So down in here between 106 and 105.5. I could easily see us down there. We could also put the fib on, Fibonacci retracement of the move. Yeah, and we're through the 382. It's been hovering around the 382 and then broke there, spiked below it, spiked back below it. We're down. We had one test, spiked lower and rebounded back from that 382, now back below the 382 and flirting with the trend line. This just looks a really negative setup, easy to the 50%, and then you can see 61.8% is down where these supports we've just talked about are, the 106 to 105.5 kind of area. Easily see that down to there today. Obviously, depending on OPEC plus, right? But this is telling us OPEC plus is going to deliver, and we're going to get a far more negative, a far more negative oil price. So looking for the market to move down into that area potentially today. This is probably the best setup we've got in here going into the day. I think it's a really good setup. Stop, you can put a stop above here. It's a bit of a way away, but you need to, trading maybe the micros in here, guys. Because this is really moving, so you can probably go back down and trade the micros, and then give yourself a little bit of a bigger stop above like 110.5, and then looking for this to drop, $4 to $5 on the downside. All right, I'm going to wrap it up there. I'm going to wish you all a great trading day. Any questions, please do throw them in. Not getting many questions coming through in here today, guys, recently. So send us through anything you want in the webinars, anything you'd like to see, anything you like different about the webinars. Or you can, if you're live, you can put it through live into the chat, okay? So there's the chat box just below where we're streaming live on the the trading homepage, okay? The trading room homepage. So you can talk in where we stream live. We can you can stream in there. So I got, who's that? So okay, great prep for the day. Thank you, thanks, and great prep. Okay, just thank you. I'll take the thank yous. Who's that? R. Clinton Ollers. Okay, PhD. Cool. Many thanks. At least there's someone, I know someone's there. No worries. I'll be back with you. Actually, I won't be back with you tomorrow. James will be back with you tomorrow in here. James will be back with you tomorrow. And we will, as usual time. So James will be on tomorrow. I'm going to wish you all a great trading day. I'm going to wish you a great weekend, as I'm not going to be on tomorrow. And I'll speak to you again on Monday. Stay safe out there. Helmets and goggles on for that PCE data. Watching out for that PCE data. We have that now in 35 minutes. Have a good one, guys. Bye.